talk about the entire QSR space, because you have that one actually seeing a lot of competition, a lot of healthy competition creeping in. But what lies ahead for the entire sector? Let's understand that with Karan Taurani, of who is the Senior VP at Elara Securities. A very good morning to you, Karan. Thank you so much for waiting by patiently. And I wanted to understand, how do you view the impact of these festive season promotions, special offers on the overall recovery when you talk about the entire QSR space? Because we have seen a lot of momentum on that particular front, right?
Right. Hi, morning. So if you look at the QSR segment, I think the first half of FY25 was quite muted. Most of the companies reported a decline in terms of SSG. I think the average SSG decline, if we exclude Jubilant, which was positive in terms of SSG, was around 5 to 6%. So things continue to be quite muted as far as demand is concerned. I think the festive season also will bring some sort of a respite. You may see some positive SSG in the month of November, December towards the fag end of the quarter. But I think on the entire quarter basis, the growth rates will be flattish on a YY basis as far as SSG is concerned. And the problem herein is clearly dine-in, right? I think dine-in as a channel is not doing well. You are seeing heavy competitive intensity there. You are seeing discounting, prices have been cut by the smaller players. You are seeing fragmentation by the smaller players who are expanding very, very aggressively. So I think delivery-based players, particularly Jubilant, is expected to do a better performance this quarter once again, and could be in the positive trajectory as far as SSG is concerned. So this is the broad expectation in terms of festive season.
All right. Hi, Karan. This is Shrishti also joining in. Very good morning. But wanted to understand that given the expected recovery in the triple SG for December with a growth of 2 to 3%, do you believe this growth is sustainable, or is it largely driven by the temporary factors like increased footfall or promotional campaigns?
So I think as of now, we'll have to go one step at a time, because clearly, when we started FY25, there was a lot of noise that, the festive quarter is going to be very strong for QSR companies. But that's not been the case for now. So I think I don't see that the momentum will sustain in Jan, Feb, March as well. Because there are structural challenges on two things. The one is the dine-in issue. The growth on dine-in remains to be quite muted. Footfalls are not coming back, in malls and everything put together. We have just seen some kind of momentary-based footfall, which could be maybe because of these of Pushpa 2 for a few weeks. But apart from that, I think Jan, Feb, March, there is very low visibility of footfall again coming back in big numbers. And I think the second structural risk is around the competitive intensity. So in no means, these smaller chains are not kind of shutting down outlets. They are not doing anything. They're scaling down. Their expansion plans, remains to be on track as far as, it's as aggressive as it was about a year ago. So I think unless these two issues don't get resolved as an industry, you will continue to see struggle. But nonetheless, there are certain categories which have got respite here. So one, of course, is the pizza category, because therein it's 70% delivery led. So, you have got respite there because delivery is doing much better as compared to dine-in. Second category, which has got some bit of respite in our view, is the fried chicken category. Because in terms of store addition, the numbers have been fairly good by, Devyani and Sapphire, both on KFC side. So I think these two categories are seeing respite. Burger categories under severe competition right now. The competitive intensity has just started to grow over there, as what we saw in the pizza category about 2 to 3 years ago. So clearly, it's a mixed bag as far as performance is concerned. And I think, we don't see these numbers of 2-3% sustaining because clearly margin pressure is there. So the first monitorable would be in the near term to see that, the margins don't fall off beyond a point. Because even this quarter on a YY basis, we do expect margins to fall by 100-150 bips because of promotions and discount. So first, I think the competitive intensity has to kind of, stagnate or probably, come off. Margin pressure needs to come off, and then we'll see growth coming back. So it's still some time away to come back to the growth of 2-3% SSG on a consistent basis.
Karan, what does this mean for investors who are looking at this space very closely, given the fact that you said the competitive intensity needs to come down, the margin pressure needs to ease, also the fact that the SSG is also impacted with the fact that a lot of people are sitting at home and ordering most of these products at home, all thanks to the quick commerce space. So how should one, as a viewer, as an investor, view the entire QSR space? Do you think that the valuations that these players are trading at are reasonable?
So I think, again, in terms of valuations, most of these companies are trading at rather premium valuations. If you look at the likes of Jubilant, of course, they've got growth by their side. SSG has been good. But again, this has come at the cost of margins. In terms of their EBITDA margins, it was, more than 24-25% until about 18 months back. And they have given free delivery. They've again pushed this entire discount, dine-in offers, which is kind of leading to low margin. And, the growth has kind of picked up. But nonetheless, they're doing a better job in terms of execution versus what other players are doing. So I think structurally, the risk remains to be the case. As one risk, of course, is the increased competitive intensity, acceptance of new brands scaling up because of ample liquidity, valuation raise, everything put together. And of course, the second issue is also in terms of Zomato, right? I mean, Zomato, Swiggy kind of aggregators have also kind of, increase the number of options that a consumer would want in terms of delivery. But I think dine-in channel to come back, what needs to be the solution here? I think some kind of menu innovation, some kind of exclusive dine-in offers need to be there, and the competition kind of needs to cool off. You need to have something different versus the competition to give the audience for them to come back in large numbers. Otherwise, I think these kind of concerns are going to persist. So it may be bet on quality as well. So maybe these global QSR chains can kind of give better quality food at a very good price as compared to what the smaller chains are doing to actually get footfall back on track.
All right, Karan, and onto some of the recent news flows, like with Swiggy rolling out its One Black, that's the feature that they have come out with just yesterday. So do you think that dine-in based QSR chains like Devyani, Sapphire could see some respite in growth?
Yes, of course. As I said, structural issues are there. It is just that the worst is over. So as far as QSR is concerned, we don't see things, worsening off from here on. We have already been through a phase where an SSG decline has been, 5-6% for many quarters now. It is not just a one-quarter phenomena. So things have definitely kind of worsened off. Things have definitely kind of stabilized as far as dining channel is concerned. But, when will the growth come back? When will we go back to that number of, 2-3% SSG on an annualized basis? I think that is a very big question mark for now. So we'll have to wait and watch and see how things pan out.
Watch how things pan out, especially for QSR space. And like Karan mentioned, the competitive intensity, the margin pressure still persists for all of them, and also subdued SSG growth. So let's wait and watch out how the entire scenario transpires for the QSR space. Thank you so much, Karan, for being a part of the show and sharing your views with our viewers. And
if you like this video, then like, share and subscribe to ET Now.